Now adjust the volume control so that the sound can be heard in all parts of the room.
This is the Protect Your Assets podcast.
You get the idea?
It's on the internet.
Make him the cutest that I've ever seen.
Go on.
Give him two lips like
It's like no cheese I've ever tasted.
and tell him that his lonesome
Here's the
nights
Sandman.
are over, Sandman.
You love it. You know you do. Why else would you spend so much time with it? I'm talking about your favorite car. Or if you're fortunate, car collection. But the truth is, when you die, decisions will have to be made about your precious car that you may or may not agree with. Why leave that to chance? If this describes you or someone you know, don't miss a single minute of this important episode of Cars and Coffee. Everything you need to know as you're driving over to that event right now. Let's face it, they're going on all over the Bay Area. Good morning. Welcome to Protect Your Assets. I am David Hollander, your host. It is so great to be with you on this sunny Bay Area morning. The chill in the air. People are driving to different towns where Cars and Coffee is happening. For those of you just joining me for the first time, welcome. People around here, you hear the jingle, they call me the Sandman. And that's because I answer your most troubled tax, legal, or financial questions. And I've been doing it for over 20 years. That's because I run a tax, legal, and financial firm. You can always send me a question. I love your questions. Had some good ones this week, like should we pay off our mortgage? I got a couple of those with rates dropping. Email me a question. Questions@pyaradio.com. Again, questions@pyaradio.com. PYA for Protect Your Assets. Had somebody come in this week, said, I want to protect my assets. What can you do? And so we sat there and talked for a while, and it was a great meeting. Anyways, with Cars and Coffee going on this weekend, I've been invited to 2 car shows I'm getting ready to go to. I thought it made sense to talk to you today about some of these cars. After all, they've gotten exceedingly valuable and very expensive. Some of these classics are selling for a lot of money. And if you look at the car week that just happened in Monterey last month, the average price of all those cars that were sold, you know what it is? $500,000. The average price. And they had some special Ferrari go for like $26 million. This was a new 25 Ferrari at an auction. And so if you don't deal with these issues, then they could really consume a fair amount of effort, energy, taxes, problems, all this sort of thing, just because it is such a special item in your portfolio, if you think about it. So with a little foreplanning that doesn't have to be intense, I'll try and go through the basic framework today and give you some things to consider and think about to get ready for how to protect that asset when the time comes. Now, let's get started. Well, the Fed decided to cut rates, and the Dow liked it. It was up 1%. Year to date, we're up almost 9% on the Dow. S&P up another 1.2%, up over 13%. I can't even believe it. 3 years in a row. NASDAQ up 2.2%. Now it's up 17% for the year. Remember, we were down over 20% below. So that's a big move. The MSCI index didn't really care. It was flat this week. But still, year to date up 22%. That's why you got to be diversified. 10-year Treasury. This is the story. We'll get into that here in a minute. Closed at 4.13%. Oil down 0.5%, $62.36 a barrel. So the Fed decided to cut rates this past week. I'm sure you heard about it, and it was driven by the labor market. The Fed's worried about the job market. They're worried about it getting worse because over the last 3 months, new jobs have dropped to the lowest levels we've seen for 10 years, if you exclude the pandemic. So that's not good. And when you add to that the unknown impact of AI, I had a very good conversation with someone this week about AI and all the jobs that are going to be lost or changed because of AI. This person made some very good arguments that got me thinking about what that means. So these type of numbers, evidently, the lowering job numbers, these typically precede a recession. I'm not saying there's a recession coming, but I think the Fed is basically buying some insurance by lowering interest rates and signaling that they might do it again this year when they meet next month in October. And then there's one last time when they meet in December, and that's it. So we'll wait and see what they do, but it's looking like they're going to take it down at least another quarter before the end of the year, and that'll either be in October or December. We'll just wait and see. The story this week was U.S. government bonds. We think much of the upside from interest rates being cut has now been fully priced into the market. So what should you be doing as you're looking at your portfolio this weekend? Well, the rapid easing cycle has definitely spurred a rally in the Treasury market. And as I just said, the 10-year closed at 4.13% Friday. So most of that action has happened. And if you're looking at your portfolio, you probably want to decelerate your aggressive buying of the long end of the curve, meaning anything after 12 or 14 years. It's really just not there anymore. So that's what you do with your bond. Next week, we'll continue to see more data on inflation, and that is important. If you have a car that's been climbing in value, I've been amazed by this. This is interesting. Cars are becoming now another asset class, an investment. The rate of returns on some of these cars is incredible. So if you have a car that you've held on to for a long time, and now it's worth a lot of money, or it could be worth a lot of money in the future because it's low production, it's a special model, it's got some appeal. Those are all the things that make cars valuable. Well, then it makes sense to find out what you need to know for your loved ones who are going to inherit or have to deal with it when you're not here. When we come back, we're going to talk about that. I'm going to give you a basic framework of things you need to know when it comes to your car. You are listening to Protect Your Assets with David Hollander. That's me. I am the Sandman, and I will be right back.
Take the first step toward reaching your financial goals and get the information that can help you live a confident retirement. That first step is going to pyaevents.com and signing up for our next free event. That's pyaevents.com. Now, back to Protect Your Assets with David Hollander, the Sandman.
Welcome back. I am David Hollander. They call me the Sandman around here, and that's because I help you sleep well at night by protecting more of what you've worked so hard for. And if you have cars like I do, you know how we feel about them. They're special to us. And sometimes they're worth a lot of money. And today you may be driving to a car and coffee city festival that's going on. There's 2 of them going on right now that I'm going to be attending, because there are going to be some really neat cars out there. All right, we're talking about cars this morning because they are crazy expensive now. People are actually using cars or keeping cars or buying cars as investments, almost like art. And there's a lot of things you need to know about it. So with the average sale price at the Monterey Auto Show of $500,000, can you believe that was the average price? I mean, we're talking many, many cars were sold, and the average price was $500,000. Sure, there were some below and higher, but wow. So let's start out with this. Are your loves their loves? What do I mean by that? You may have a spouse, child, grandchild, or brother or sister who shares the same passion for your car as you do, But more often than not, in my experience, none of your heirs feels as strongly about that car as you do. Even those who do appreciate and admire your car might not feel that they have the knowledge or the money or time to properly care for that car or the space to keep it. Cars usually attract a negative cash flow. I know we all think about how much they've gone up in value, but if you know, like I do, they cost money, sometimes real money, to replace things. They may be worth 2 or 3 times what you paid for them, maybe even 5 or 10 times. I've seen that happen recently. But as you know, you have to constantly put money in them. A buddy of mine just drove one of my collector cars, and he told me he needed new tires. It's $2,500. Yep. So you've got to store them, maintain them, repair them, insure them. It takes money to own these cars. So if you leave them to somebody, whoever you leave them to, they're going to have to bear those costs. With all that in mind, it's important to have a frank conversation with your family about whether they would or could become the steward for your car, or whether they'd likely just sell it off. So I recommend you make sure that you let them know what your intentions are. It's more important if the car is going to someone outside of your immediate family, because if you promise to sell it to a buddy at a specific price, for example, make sure that those details are written down. Even if it's in your own handwriting, you should sign it and date it. Did you hear what I just said? It's in your own handwriting. So let's say you're sitting out there right now, cars and coffee, your buddy's there. I'll sell you this. How much? This. Okay, well, get a piece of paper, write it down, sign it and date it, and have a witness sign it at a minimum. Because I saw a case recently where a distraught widow whose late husband, the buddies who hang out with this fella, had been hounding him about his beloved Porsche. One guy actually stated to her that her husband had promised the car to him at a specific price, and this price was severely discounted to what the car is currently worth. She was so upset that she considered a deal at that price just to have him stop harassing her. So, I'm talking to you. At the minimum, make a will. And in that will, you should name an executor. The executor is the person who oversees selling the asset, including this car we're talking about. But how knowledgeable are they about that car? If the answer is not very, well, then you could additionally name an executor for the car, for a specific asset. So you have an executor deal with everything else and then have someone deal with the car. You could name your oldest daughter. Like my oldest daughter loves cars. Maybe I'll have her deal with that. You could also have a buddy. I have lots of buddies who know all about cars. I have a couple in particular that I would say know a lot about cars, and I'd be happy to have them do it. You could also say that the executive of your estate must consult with your buddy or your special friend who knows about cars when it comes to that car. These are things you could just put in the document itself. And you should definitely talk to your executor now and make sure they understand what's involved in selling the car and that they are agreeable to doing it. And make sure that you compensate them. Do you hear me? Compensate them reasonably to do the job, because it is a job. Make sure you're organized. Make sure there's someone who knows where all of your cars are. You hear that? All your cars, where are they? You laugh, but you may have a car at a shop or with the team that your spouse or your kids have no idea where to find it. Or that you maybe even have it. Then there are all the spare parts and records, all the paperwork and receipts you've kept, hopefully digitally, for the parts, restoration work, tires. All these records should be part of your estate plan digitally or in some sort of format where, again, this person who's designated to deal with it knows where they are and knows where to find them, because these expenses are deductible and could save your family tens of thousands of dollars in taxes if you do it right. You definitely want to avoid probate. If your car is worth more than $150,000, well, think probate. Because when you die, a car becomes part of your personal estate and must go through probate to change the title to whoever's going to get it. Even if you have a will, that car will still have to go through probate. Probate is expensive. It's time-consuming, and in California, depending on what county you're in, we have experience with many counties, it could take up to 3 years to distribute that car through the process, meaning you can't sell it. So, something you could do to avoid that is consider joint ownership. And if you don't want to do that, because there might be a gift tax involved, then do a trust. Trusts are easy, especially revocable ones. And upon your death, they could transfer the car to the beneficiary. That way, the vehicle's not in your name. It's in the name of the trust. And guess what? Trusts avoid probate. And make sure your trust specifically talks about your car. Remember, that discussion above about the hassle and documentation, remember the receipts and all that? Well, make sure that that's in your trust, where to find all those things. The other thing you need to consider is the issue of liability. We're seeing a lot of this right now with all the fires that happened down south. Insurance must name the trust or be covered in the insurance document. Make sure the trust is actually named, because if it's not, and just it's your name, the insurance company might not pay. They might say, oh, we're not paying for that. It's not yours. What do you mean it's not? It's a revocable trust. Anyway, you don't want to go through that. Also, what about lawsuits? Had a guy sit in my office yesterday talking about protecting his assets. He said, I'm worried about being sued. And I said, okay, what do you have? And so we went through everything he had, and we went through his work and what he's doing. And I said, all right, here's the list of things I want to see, and I'm going to come at you like I'm coming at you. And I'm going to tell you what you can do to protect it and how you can do different things to, block and tackle. That's what I do. I'm good. I'm decent at it. So we're going to do that. As long as he gets me all the information I need. Cars can open you up to liability. You get your daughter's driving your car, gets in an accident, bumps some guy in a tunnel. It was just a light fender bender. Well, I have one friend who's been tied up in lawsuits for 2.5 years. Hundreds of thousands of dollars in legal fees. For what? A dent on the bumper? Really? Yeah, it's possible. Depends on what you have in your name. So make sure on the certificate the trustee is named, because as the trustee in a revocable trust, you have the power to buy new cars and add them to the trust document. You can still borrow against them. You could sell them as long as they're in the trust and the power is in the trust. When you sell a car out of the trust, the bill of sale or transfer document is signed by the trustee. They are technically the owner of the vehicle. Putting a car in the trust, a revocable trust, does not have any income tax because it's still revocable, still yours. The asset is treated as yours for income tax purposes. So if you sell it at a gain, you're going to pay taxes on that. Likewise, if you sell it at a loss, you get to deduct that. Since the trust is revocable, you can tear up that trust at any time if you want to. Just make sure you do that in writing and that you have an amendment which says you did that. You also have the right to alter, amend, revoke, or terminate that trust in the future if you want. And trusts are typically not that complicated to draw up, but when it comes to your special car, please put some thought into that. document so the person who takes over has a much easier task at hand, because after all, that's what we're trying to do today, is make it easier for them. Now, maybe you've never even heard of any of these things I'm talking about, and if you have a trust, I'll bet you that it doesn't say anything in it about your car. And the car is probably in your name right now. So if you're motoring around right now and you're out your way to Cars and Coffee, because I know several towns this weekend are doing it, I'm about to head to one myself, then pick up the phone right now and call us, because we specialize in this, and I've written an article I'll share with you right now for free. We'll just email it to you, so all we need is your email, by calling this number, 866-776-8328. Easy number, 866-PROTECT. You want to protect that car? You want to make sure it goes to somebody who cares about it? 866-PROTECT. What are you waiting for? 866-776-8328. Coming up next, it's time for our popular They Say segment, where they say your kids could avoid paying tax on an $850,000 gain on a car sale. Is that true? You'll be surprised at the answer. You're listening to The Sandman on Protect Your Assets. We'll be right back.
Take the first step toward reaching your financial goals and get the information that can help you live a confident retirement. That first step is going to PYAevents.com and signing up for our next free event. That's PYAevents.com. Now back to Protect Your Assets with David Hollander, the Sandman.
Welcome back. I am David Hollander, also known as the Sandman around here, and with Cars and Coffee going on all over the Bay Area right now, you're probably driving to one right now. I thought it made sense to talk to you today about your expensive car. The Monterey Car Week wrapped up last month, and there were more people there than in the history of the festival. And the average sale price of cars sold there was $500,000. Some of these cars, if you have a will or a trust, they're worth a lot of money. And now that cars are becoming an art piece, collector investment in a portfolio, you need to think about them a little bit differently, because these things are now worth quite a bit of money. And they present their own special problems. And unless you're a car person, you don't have any idea what I'm talking about. So for those of you who are car people, pay attention, because we're going through it this morning. Some basics that you need to know when it comes to your favorite car. Now, before we get there, we are doing more tax smart retirement workshops this year, because we have about 3 months left before taxes are going to start to be due on what's going on this year. And as you heard at the top of the hour, the markets have been doing very well. Many people have been making a lot of money. And you're going to start paying some taxes on that next year, most likely. So now is the time to start thinking about it and arranging it so you can minimize those taxes. But if you don't know how to do that, and you're not familiar with the big, beautiful bill and all the tax deductions that are there just in 2025, then you need to get educated on it. So we're doing a special workshop just on this, and people are coming out. This past week, we were in Alameda. Had a lot of people come out. It was good to see you again. I appreciated being back in the market again out there. And next week, we'll be back there again. And we'll also be at Perry's in Larkspur, where we have some availability right now. So if you want to sign up and come see what we're talking about and how we're helping our clients get ready for taxes, go to our website, libertygroupllc.com, libertygroupllc.com. Click on the events tab, and you'll be taken to the workshop schedule. And there's a blue button right there. It says register. You can just click it, and that'll take you where you need to go. Now it's time for one of our fan favorite parts of the show. This is our They Say segment, where we debunk common myths, half-truths, and sometimes just bad advice that they say.
Who are they? What do they know that I don't? And what are they saying this week? Here's David Hollander, the Sandman's answer.
All right, so here's one I recently heard. They said that you can pass on an $850,000 gain or more to your kids without tax. Is that always true? Well, as you know, we've been talking about cars this morning, and cars present a special set of problems. And because you know that car, you probably bought it. Maybe you lucked out and now it's worth over $850,000 in terms of gain. You're wondering what to do with it. Well, you could certainly sell it now and start to wind down your holdings as you approach your mortality. And the advantage of selling it now while you're still around is that you usually have a lot of knowledge in your head that only you know that you can share with someone who's going to buy it. If you were to pass it on, others may not know what you know, and that could be a problem. For those cars that have appreciated significantly, there are capital gain tax considerations that may make it advantageous for you to wait and pass it as part of your estate to your heirs and let them do the selling. If you sell a car that has appreciated now, the difference between the selling price and what you paid for it, of course, less any of those restoration costs, is subject to, as long as it's over a year, a federal capital gains tax rate of 20%. There's a 3.8% Medicare tax. And in addition to that, if we're talking over $1 million of gains that year, including your income, you're looking at a state of California tax of 14.4%. So all in, you could be close to 40% in taxes on the sale of that car. Let me give you an example. A collector who bought a Lamborghini Miura 30 years ago. That is a nice car. They probably paid less than $100,000 for it. Let's say they sell it for $1 million now. They're looking at over a $850,000 plus gain. But if that same Lamborghini passed through the estate to that fortunate heir, the heir's cost basis is not the original price that he or she paid for that car, but instead it's the appraised value of the car when that person inherits it. So if the Miura appraises for $950,000 and then you go ahead and sell it, that kind of car you want to do an auction at like the Monterey Festival, someone who knows these things. This happens a lot. A lot of people think they know how to sell a car and they just don't. So make sure you find the right people to do that. Anyway, they sell the car at auction for $950,000. Guess what? They're not going to owe any capital gains tax if it appraised at $950,000. That $850,000 plus capital gain tax is stepped up and not taxed to the beneficiary. Whew, all tax-free. Beautiful. What if you arrange it now and sell it later? Well, that's the middle ground between selling your car now while you're still around and leaving everything to your heirs to sort it out. A collector with significant holdings that are going to be liquidated after they pass may want to make arrangements with an auction house or other dealer ahead of time to handle the sale. The process for pre-selecting an auction company to liquidate your collection would look something like this. First, the auction company will familiarize themselves with your cars. They can assist with putting together appraisals for your estate. Usually the appraisal cost is only applied if the collection doesn't come to the company for sale. The collector also negotiates the seller's commission. Setting this up ahead of time can save your heirs a major headache when it comes time to deal with it. The tax man cometh, as we talk about, and as we've been saying for weeks now, the big beautiful bill has passed. And most collectors don't have to worry about their holdings being subject to estate taxes because right now it was just increased to $12.99 million per person. And next year it goes to $15 million per person on estate taxes. So as a result of that, if you have a car that's worth a lot of money, and there's some of them running around right now, like those Carrera GTs, and close to $2 million now, something like that. Some states levy an estate tax. So know that, because that could be an additional tax. The lowest exemption currently is Massachusetts, where that estate tax kicks in at $1 million. So realize that. You may have to pay state estate taxes, not in California. But if you're registering those cars in other states to take advantage of lower taxes, which I know some of you do, well, that could come back and bite you. So be careful when it comes to that sort of thing, because again, those estate taxes and any taxes are due on the appraised value 9 months after you die. That's the rule. And so those with substantial collections or holdings are going to be subject to estate taxes. There are strategies you can use where you will avoid things like that, avoid taxes like that. But again, you need to sit down with an attorney who does this, like me, who understands cars and understands taxes and law, and find out what you can do. How do you do that? How do you get started? Well, I'm going to give you a phone number right now. If you call it, we will email you my checklist that I've prepared for free, where you can look over some of these things you need to know before we meet. We're calling this Cars and Coffee, 866-776-8328. Cars and Coffee with the Sandman, 866-PROTECT. Remember, we're local. You're hearing me right now. I can see you in one of my offices here. Give us a call, 866-PROTECT. Coming up next, find out the one secret you can use right now to reduce the risk on the sale of that car. It's coming up next. Keep it right here.
If you missed any of Protect Your Assets with David Hollander, all you have to do is go to pyaradio.com, where you can download or listen to our latest shows for free. Just go to pyaradio.com on your computer or mobile device when it's most convenient for you. That's pyaradio.com. Now back to Protect Your Assets with David Hollander, the Sandman.
Welcome back to Cars and Coffee with David Hollander, with Cars and Coffee going on all over the Bay Area this week. And I thought it made sense to share with you today some information about your car. After all, the Monterey Car Week wrapped up last month, and there were more people there than in the history of the festival. And the average sale price of those cars, of those auctions, was over $500,000. So you could be driving your nice car right now, or sitting there at the festival in your town showing people your car. But dealing with that upon your death is a whole nother matter. And make sure you get ahead of that before it's too late. Now, we've been talking about cars and coffee this morning. And so one of the secrets about how you could dispose of your car and not pay that capital gain tax we were talking about is the following. If your heirs are not interested in your collection or your car, you might decide to donate your vehicle to a charitable organization rather than sell it. The rules surrounding charitable donations are different for cars that you donate during your life versus after you die. If you donate during your life and you want to take an income tax charitable deduction, you must hold the car for more than a year. You want to donate it to a charity, a public charity, as opposed to a private foundation. And most importantly, the donated car has to be put to a use that's related to the charity's tax-exempt function, like a car museum. That use would be related to that exempt function, and the collector will get the charitable deduction for the fair market value of that vehicle today. So as I was talking about in the previous segment, we were talking about Lamborghini Miura. Some of those cars are selling for well over $1 million now. You get a full deduction for all of that. And then you can go down to your local museum and see it whenever you want. On the other hand, if the car is donated to a homeless shelter or some other charity where the cars are not related to the organization's tax-exempt function, then you can only deduct what you paid for the car. In other words, the cost basis. And therefore, you can't deduct that fair market value. So that's not the way to do it. If you want the collection to stay together, you can set up your own charity. This is advanced level information, so buyer beware right now. One way to be certain that your collection will not be broken up is to set up your own charity or private operating foundation. You can be on the foundation's board of directors along with other people like your kids. That way you still retain control over the collection. There are two types of foundations. There's a private non-operating foundation and a private operating foundation. The difference between the two, as you can imagine, is crucial. A private non-operating foundation is one where the foundation writes checks to other charities. It does not itself engage in any type of charitable activity. If you set up a non-operating charitable foundation, the income tax deduction is limited to the cost basis of the car, not the fair market value like I was just talking about. However, an operating foundation is one that actually engages in charitable activities. So a classic car, for instance, maybe you have a museum. Henry Ford, he was a very smart man. In 1929, he set up the Henry Ford Museum. And you know what he did. And you know what he's still doing and what his family's still doing. So if you want to find out about things like this, it's not too late to plan for your future and the future of that beloved car. But get in front of it because retirement is a big transition. And having cars in your retirement as your hobby or as something that's in your estate that will pass when you pass is a big decision. There's a lot involved in it, and you want to deal with people who know what they're talking about and have experience with this. Don't go this with someone who doesn't know what they're doing. You can start that today by picking up the phone, calling me. We're having Cars and Coffee together right now. 866-PROTECT. Call me 866-PROTECT. 866-776-8328, and I'll send you my car and coffee checklist. I want to give a big thanks to the Protect Your Assets team for putting together a great show today. My executive producer and network manager, Kevin Renfer, and of course, all my fabulous producers back there, Lucas and Zach and Raph. Thanks, guys. Because without my team, I'm just another pretty voice on the radio. You have been listening to the Protect Your Assets show. I am David Hollander, the Sandman. Go out and make the rest of your life the best of your life.
Investment advisory services are offered through Liberty Wealth Management, a registered investment advisor. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. The strategies mentioned are not suitable for everyone. The information expressed does not consider your specific situation or objectives and may not be appropriate for all investors. Past performance is not indicative of future results. To better understand the risk associated with investing and how it reacts to different market conditions, listeners should always consult with their qualified investment professionals, financial advisors, legal or tax specialists, and conduct their due diligence before making any financial decisions or taking any action. The legal information provided on the air is not intended to substitute for callers hiring their lawyers to advise them about personal legal matters. Investments involve risk and, unless otherwise stated, are not guaranteed. Liberty Group LLC paid for the following program, and the host's views and opinions do not represent those of the station or its ownership. California Life Agent number 048569. Persons engaging the services of one affiliate of Liberty Group LLC companies should be aware that each company is operated separately. You're listening to the Protect Your Assets Radio Network.